Are there any unique characteristics of the economic impact of the pandemic to the Northeast Ohio region?
Several of the industries that are particularly concentrated and sort of important to the economy in Northeast Ohio are industries that have been particularly hard hit by the pandemic. So healthcare in general has been very negatively impacted by the pandemic because as people were social distancing, people deferred a lot of elective surgery, things like that, which tend to be a major source of profit and revenue for hospitals. So it's a negatively impacted healthcare sector. Auto sales are down dramatically this year, and auto parts production remains a very important piece of Northeast Ohio's economy. And so with auto sales down, they were down by a third in the second quarter of 2020. So very large negative impact in the auto sales. And then last but not least, our region is a major producer of machine tools and other industrial tooling technology. And a lot of those goods get sold abroad. And with the pandemic hurting several countries that are major buyers of industrial tooling from the United States, like China, Brazil, other places, that's when other countries aren't buying industrial tooling from the United States, that means typically means they're not buying industrial tooling from Northeast Ohio.
Has the additional $600 benefit of unemployment insurance negatively impacted labor participation rates? And with it ending, what are some of the possible side effects to the economy? And I'll kick this one back to you as well, Roberto, and then Joel, I think you have something to share as well.
It's really hard to disentangle the effect of the $600 with the effect of people trying to avoid the disease and all the measures that governments actually took in order to try to reduce the spread of the disease. Right now, one thing that in terms of the impact, at least in the short term, one thing that my work with Alan and related to that some looking at the Swedish data and work from the IMF and from some other researchers show is that if we force people out and that actually induces an increase in infection rates, that might have a significant negative impact in consumer spending of the people that can adjust their spending, and the people can adjust their labor supply in order to reduce infection rate. So if we really try to cut down in UI benefits that might have an impact and a reduction in consumer spending, that might actually make the recession worse, right? But of course, it will depend on the data.
So not only does it disproportionately impact this low-income group, but those are low-income people spend a much higher fraction of their income, whether it's unemployment payments or earnings. And so it's a really large negative hit to consumer spending. So it's, there's the labor market effects, but there's also what's going to happen on the side of consumer spending and, for example, the evictions that Hal talked about. With people seeing dramatically lower income, there's going to be more people having difficulty paying their rent, things like that.
For over a century, Farmers National Bank has stood strong. Through booms and busts, peaks and valleys, we've learned to know the seasons and how to grow in each of them. During challenging times, everyone is reminded of the value of solid relationships in both life and business. Farmers stand strong.